How's everyone doing today? Shankar Puri here. Today we're going to look at the Bitcoin price and see where it's heading, up, down, or sideways. Please remember to like, comment, subscribe, and share this video if you found it informative. And remember, I'm not a financial advisor, so all this information in these videos are just for entertainment purposes only. So without further ado, let's dive right into the charts. Let's look over here. So right now we're on the Bitcoin chart. So it is the weekend. So normally we don't really take the weekend price action too seriously, just because volume's not as high on the weekend as it is the week. But we can see that right now we had this resistance zone that right now Bitcoin has come up, come down, tested. It found support there, and now we're taking off for this next leg from this breakout right now. We could consolidate. We could just consolidate for a lot longer, just because we currently have a bearish divergence. Here, let me get rid of this. Yeah, we do have a bearish divergence on the daily time frame. On the 1 hour, sorry. On the 1 hour, so we have this bearish divergence. So we could just consolidate for a little longer over this weekend. The price action may not do anything between today and tomorrow, but as you can see, so over here, when we dumped the last time, this is a rounded top. So normally this is indication of a top, and if you can see within this top, so let me zoom in here. So you can see this is a rounded top, and what makes it distinct as well is you have the max point, the high here, you had a lower high, you had a lower low, and then we had the waterfall of the price, right? So that's a bit of a distribution. So what you want to look at is, as well as this kind of looks like a head and shoulders pattern, right? So if we get out our head and shoulders tool, yeah, so we got the head and shoulders tool here. We could say this was a head and shoulders pattern. Not perfect, but you could say it was a head and shoulders pattern. And then once we broke down, we didn't have any retests and we broke down. So I want to show you this because over here, this is looking like the exact opposite, as this is looking more like a rounded bottom structure. And normally with rounded bottom structures, when they break, it's to the upside, just like how over here it was to the downside. Right, so it's literally looking the exact opposite. So that is good for the price. So we got to watch this hourly bearish divergence. We know it could just mean some consolidation. We had a nice test here, it held, but if you look over here, volume's pretty low over this weekend price action, so we don't want to put too much weight on it. Now, if we go into the S&P 500, S&P 500 is very important, as cryptocurrency really does follow a lot of the S&P, especially Bitcoin. So I indicated on the 8-hour time frame that we had this bull flag. So we'll go back to that chart, but I want to get a cleaner chart for you guys. So this is a bull flag here of the S&P 500. It broke out. And we've had, you know, a nice breakout. So let's see what happens Monday. We could definitely get a retrace and a move higher. But targets on bull flags are normally at the top of where the pattern starts. So we're going to be anticipating targets around here before the price comes back down for a major, if it would, a major retest. But we hope to get higher highs, retest, and then a bounce up. Right, so I've been anticipating this final melt up for, you know, a little time now, so I'm not surprised that we are doing well, mind you. Currently, so with the S&P 500, what you want to take into account is that we are again now at this 200-day moving average. So 200-day moving average, extremely important. So we need to get over the 200-day moving average. We're above the 50, which is a good sign because we've been under it since January 13th. So we've been under it since January 13th. So we need to get above it. And That'd be great news for the Bitcoin price. And we have this bear death cross. So technically right now, so if you have a 20% drop, it's a bear market in stocks. So let's see, have we had one? So it's only been 13%, but the fact that we were under the 200 and it was a bear cross is a strong indication that we could have been going lower, like I said. But a lot of investors, they keep cash on the side for when the price action gets close to the 200-day moving average. And we quite frankly have not seen. Let me take out the 50 days so you guys can see which one's which. So the 200-day moving average is this blue line right here. All right, so let me zoom in here. You can see it's right here. Make it bold. There we go. So this is the 200-day moving average. So last time we saw a touch was June of 2020. So if that's a lot of people's strategy is buying on the moving average, and we haven't had any touches on this moving average at all through this amazing rally that happened from 2020. So a lot of investors, if they were looking to purchase any time from here to here, would be perfect. And as the price comes up, so we may see some price increases as individuals have been offloading their dry powder into the market. So like I said in a couple videos ago, anytime we touch here, price bounces up, touches the 200, touches the 200-day moving average, bounces up, right? Bounces. We come below, bounces. So most of the time, of course, you know, we've came below here. But for the most part, it does bounce, right? And the one thing we do need to watch is, if we look here in February 2008, once we get below here, if we bounce and get rejected, there's a probability that we'll start seeing a real bear market. So we want to keep an eye on how strong the close above the 200-day moving average is, because like here, we got close, we bounce. Here we bounce, we moved up. But anytime we start making it as a real resistance, it becomes, you know, a lot lower downside. So yeah, so if we look back here again, so this is October 2000. So this was the major crash, and the last one I showed you was in 2008. So this was 2000, the crash. It was underneath the 200. So, you know, if you had positions, it's literally the other way around. Anytime I got to the 200, you'd short, or close, you'd short. You just short, right? So, but when we're in a bull market, it can go down a little bit, but underneath a little bit. But a lot of people, they buy on the 200-day moving average. This is the 2007 crash. You just short when it gets close to the 200-day moving average. So yeah, so now we just need to pay close attention to what is going to happen now. That's what we need to pay close attention to. So if Monday comes and we don't break this, and, you know, have a nice test in the week and move up higher, and that'll be good. If we do, that'll be good. But if we get rejected, you know, expect you know, some lower price action. But we've broken out this bull flag. The target is, you know, close to the top of the pattern, so we should be fine in that regard, right? And I just want to bring up the other S&P 500 chart I have here. So the next resistance we have, so is we had this double top here. So these are just some key resistance zones that we had on the S&P 500 as the price was moving over the last couple months. So don't worry if we get pullbacks, especially where this yellow line is, because this was a double top here. So if we come up and get rejected down to here, or even back to test the trend line, the 200-day moving average, don't be alarmed by that, because this is a big resistance zone at the moment. All right, so let's look at the USDT. So right now, in the last video, I did say that we had this bullish pattern, and we were anticipating it to break down. So it is breaking down at the moment, so that's very good. And if we zoom in here, it's had a bearish retest, and it's been making lower highs, so that's very good for the price action. And if you're new to this channel, I will just show you the importance of the USDT dominance when it's related to Bitcoin. So if we pull up the Bitcoin chart, it's inversely correlated. So if we broke up from this bullish pattern, you could more or less expect Bitcoin to dump. But as this bull market has been happening, anytime we've got to the top of this pattern, to this resistance line, and we've broken down, the price has skyrocketed, right? So you want to keep that in mind, that the probability for Bitcoin to increase right now is a bit higher in my beliefs, because things are looking good. You know, we want to stay level-headed, of course, but things are looking good. We have this Wyckoff distribution accumulation that we've been following for the last couple months, and it has been holding steady. We're currently in this bullish pattern right here. So if we can break to the upside, retest, and go higher, this Wyckoff distribution Wyckoff accumulation pattern would be valid. Like I said, invalidation points would be if it broke this here, or if it even broke this level here, then the Wyckoff distribution accumulation pattern would be invalidated, because we're in the point where it needs to start making higher highs, right? So if we don't make higher highs, even if we just start consolidating like this for 2 more months, it would invalidate the Wyckoff, this current Wyckoff accumulation pattern we're tracking, and we'd have to just find another schematic that would work and fit. So all right, guys, so lastly, we have an important weekly close. Weekend closes, weekly closes, very important for the Bitcoin price. Like I said, guys, ever since we crossed up here into the 20 zone, I said we're bullish. But again, we need to get past 44.5K, right? But because we have the NVT, net value transfer of Bitcoin, showing red, and we have the stochastic crossing up, we are showing that the probability on the weekly, we have momentum to the upside. But my confirmation as well for the price action is this point right here, right? So the 44.5. So the 44.5 price range also coincides with right here. So this trend line that we've been following all the way back from, that has been created from all the way last year, from the summer crash, right? So just delete that there. So if we broke it today, the price would be about 44,700. So chances are we won't break it today. We might break it in the next coming days. So that'd be about 44,500 where this trend line is, this yellow trend line. We just embolden that for you guys so you can see. So yeah, so this trend line, that's what we're looking at, right? So everything's looking great for the Bitcoin price. We are still anticipating the last leg of the cycle, right? We are here on this channel. We are anticipating the last leg of the cycle. And if this isn't the last leg, we're at least anticipating the next leg up. If this is not the last leg, we are anticipating the next leg up of this cycle before we head into a bear market, right? And a lot of people say that the bear markets are not gonna happen again, but I do believe that it's just cycles. It's just how it is. You know, Bitcoin's gonna get its adoption, and eventually the swings aren't gonna be as volatile, and they've been less and less as, you know, the years go on. But I do strongly believe that we're gonna have a bear market, and it's gonna catch most people off guard, because I could already see a lot of YouTubers talk about You know, the 4-year cycle is done. There's too much adoption. But don't forget, it's not necessarily a 4-year cycle. The cycle is after, well, yeah, so how they calculate the 4-year cycle is based on the blocks, the Bitcoin being halved every 4 years. But it's not actually being halved every 4 years. It's being halved every 210,000 blocks. So after the 210,000 block of Bitcoin, that's when the halving occurs. And that's when you normally get that parabolic move to the upside. And because Bitcoin is harder to mine as the years go on because of the adoption, the cycles get extended. So it was never a true 4-year cycle. But this is the, I think, 3rd or 4th cycle that we're in. So I think we can see that now, that it does extend every time. So we just got to be cognizant of that, is that, yeah, this has gone on for a lot longer than people have thought. And we can't even compare cycle to cycle, right? Like, this cycle looks totally different from this one, which was literally like just a straight line up. And then this cycle looks like a 5-wave Elliott wave right here, right? And then we have like a 1 year of consolidation. So all the cycles are different, but I want you to just remain level-headed. And as we get this, which may or may not be the last leg of the bull market, but as we get this upswing, which I'm very confident that we're about to have in the price, remember that the price goes up, but it will also go down as well. And don't forget that if we look at the 10 and 2 year, actually, let me just, yeah, I'll just pull it up. Oops. Oh yeah, you can see Lakers game there. Took my brother yesterday to the game, and you know, we're in Toronto, and this guy wore the LeBron jersey, talking all the smack when LeBron was scoring. So you have to keep in mind that we're getting close to this a point down here where every time it has called a recession. And don't think just because you're in Bitcoin and cryptocurrency that you can just keep all your money in that asset and it's not going to crash, right? Cryptocurrency is only a $2 trillion market cap, and we're expecting, you know, a lot of people are expecting, you know, $5 to $10 trillion by the end of this bull run, and it can very well happen in a short period of time because it's such a small market cap, and it could happen. But you got to remember that we're getting close to an actual, you know, recession where prices may not go up for a while, and you don't want to be holding these bags. Because I remember when I was you know, in 2017 when I put a little money in, and banks were thinking of talking about getting into crypto, and people were saying, man, this is never going to go down, you got to buy. And then the price went down. You know, more adoption came in 2017 than 2013 and 14, so people were convinced that now the price isn't going to go down. Same right now. The same thing is happening right now. You think that man, everyone's gonna buy Bitcoin, the price is never gonna go down, just buy your altcoins, they're all gonna make it. But let me show you something, man. Let me show you something. Look at that, Bored Ape Yachts. Amazing for the people who bought that. You know, there's a lot of people in the crypto space who definitely glossed over Bored Apes. Same with myself. When they were like, you know, $1,000, and I didn't really understand NFTs to that extent at that time. So if you're a holder of Bored Apes and you're still holding, congrats, because whether it was lucky or not, man, you made serious bank on that. So let's go here to the gold price. So, you know, a lot of people hold gold, right? So, okay, this one only shows only 2005. But the price from 2005 all the way to 2011 went up 333%. Holy, that's amazing. And the market cap of gold is 10 trillion. It's you know, pretty much a great it's the standard, the gold standard. But in 2011, gold went down 44%. So if you were dollar cost averaging into gold right here, it would have went down 44%. And look at that blow off. Look at that blow off top we had with gold over here. Look at this blow off top. Look at this. right here. We had a nice blow off top and then the downtrend, right? So what's happening with gold actually? So right now it's actually made a double top and it looks like we're coming down, but that will be for another video today. But I just want to show you that don't get psyched into thinking there's not going to be a bear market and start buying and buying and buying as the price starts moving up 50% a day or 40% a day, especially in these altcoins. That will be normal once we take off again. You want to start selling into strength and just be cognizant of the fact that keep a note of the coins you like. And if you have a bag of them now, you can sell them, and the price when the true bear market comes is going to be worth like 50 to 80% less than the all-time highs. So there's a high probability whatever price you sell at into strength, it's still going to be higher than the price when it bottoms out. So keep that in mind, and don't have the FOMO that oh man, it went up. Because trust me, when it goes down 80%, you're gonna say, man, I should have sold. It's below the price you even bought it at. So keep that in mind. But without further ado, guys, thank you so much for watching this video. Please like, comment, subscribe, and share if you found this informative. And I'll be back again with some more videos to guide you through this cryptocurrency market. Thank you.